Is it ever okay to chase a market? Stay tuned. Hey guys, warm welcome to you. All right, so is it ever okay to chase a market? Simple answer is no, but let me qualify that by saying why and also define what we mean by chasing. So chasing to me is blindly buying or selling when you see some kind of excessive movement in the market. Example today, cable, big kind of offer coming in, a big load of supply, pressing down on price, demand backing off because of headlines from Brexit. It doesn't matter what the kind of reason was, but there's a lot of panic going on here in this kind of brief period. It's a 5-minute chart I've got up here, in this kind of hour, 15-minute period or whatever it is. Now, the thing is that, there's nothing wrong with joining a trend and joining momentum. And in fact, that's something that I do regularly. Momentum ignition is one of my trading strategies. I have a filtering process. I have a trigger process. It's in my momentum ignition bucket, and it works beautifully well under the right conditions. You know exactly what I'm looking for. Know exactly what it is. It's a worlds apart from just chasing. Now, why is it worlds apart? Why am I saying, well, this way, my way is really great and that way's not? Let me kind of qualify that, and you can make your own minds up, guys. I don't pretend to be right about everything whatsoever. I just kind of share what works for me, and maybe you take away one or two things and helps you move forward a little bit more to the next station, to the next level in your own trading. But when you're just chasing blindly and selling at lows, you have the main thing you're giving up then is risk. Where am I going to come out if I'm wrong? What would happen if you sold at this low here on cable and it just went straight back up again? Probably, if you're honest with yourself, you're going to be a deer in headlights. Maybe you said yourself you cut it here, or maybe it kind of went a bit more and you gave it a bit more room. You're opening yourself up for severe damage. And sometimes, guys, we get times when headlines get spoofed one way and then it just rips the other way, so you get kind of double whammy. So chasing stuff just really gives up control of the risk. Now, when I talk about a momentum ignition type trade, this is more to do with I've seen momentum, it's passed my filtering criteria, now it's set up my trigger criteria, and I'm going to pull the trade. I pull the trigger on the trade. But one of the key components, alongside other things like grading the trade, etc., is where the risk is going to be. What's the risk reward ratio on the trade and the probability of success? So if I'm taking a momentum ignition trade, which some may consider chasing, to me it's different, because the one thing, and by the way, you can use any strategy you like. You don't have to kind of adopt this process that I do. But whatever you do, it's having a sensible and fixed good position for your stop. And chasing, often you throw that out the window because you're so keen to get in the deal, so keen to get on, because in your mind you're thinking, I can get a quick 20-30 pips on cable on the short side, a couple of minutes, I'll be in and out, I'll make £500 or £600 or $600, and that'd be great. Kind of good trade to start the morning, have my coffee, and that's what's going through your mind. But in actual fact, when it kind of reverses on you, you're stuck, you don't know what to do. Whereas when you're waiting for a specific pattern, like a pullback, like any of these kind of patterns that you don't have to go into depth of them, but you're waiting for some kind of movement like that, then you can start to frame your trade. You have to go, okay, well, my risk makes sense for me to have my risk there. It's not a huge amount of risk. I'm not putting my stop up here. It's kind of, I've waited for a little pullback and it's rolled back over. Oh, great! I'm going to take the trade here. I'm going to put my stop here. It looks like I've got a 2-to-1 risk reward ratio on the trade. And if I get stopped out and it comes back up, then so be it. We can't control everything, but you've got control of the trade. And chasing, often you just release control. You just said, I'm impulsively going to take this trade because I think that it's going to move quickly. I think that it's going to continue moving, but you've got no idea. You've not given it time to move. And listen, from time to time, you're going to miss one. You probably, who knows, maybe next week something's going to just suddenly ping off. You're going to watch the video and go, I didn't chase it, and then you're going to miss it, and it's going to. That's the exception to the rule, guys. And even and this is something I talk about a lot, is even if it keeps going and going, that's great. If you're not in it, that's still great, because it means the next setup that you get from that This is momentum. The next ignition, setup, and strategy, and kind of price action, candle shape, and intricacies that you get are going to be even more powerful. So you just can grin to yourself and go, you fly. Because the next time you kind of ease, pause back, you do this, you do that, you kind of do these little tricks that we look for, then I'm on it and I know that I've got a high probability of success and I'm ready to dial up the size on that. So, chasing is, I consider chasing to be when you're just diving in without. And I don't think that's a really good way of doing things, guys, for the reasons I stated before. Another thing is, markets are often moving, even if they're moving one direction, they're going to move in cycles. They're going to move up a bit, down a bit, consolidate a bit. You ideally want to position yourself in one of the other two cycles that's against the trade, if that makes sense. So let me kind of explain that a little bit better. Let's say you've got the explosive move. The other cycles are pullback or consolidation, for example. So you don't want to get yourself involved with the explosive move. You want to wait to either in the pullback or the consolidation. You don't want to be, getting and chasing every little thing. You want to see some form of unwinding of the market, some kind of congestion and digestion, and acceptance of price, whether that's a pullback, whether it's a range bound condition for a bit, just something that is a shift of phase. And then your job as a trader is to then identify when we're shifting back into the momentum phase again. So you see momentum, you see the pause, that's a shift in phase, and then you're waiting. And then your job as if you're using price action or whatever strategy you're using, I prefer price action, so I'll talk a bit from that perspective. Your job then is to look for that price action that goes, bang, momentum is back on. We're back into the phase of ripping again. Take the trade, place a stop in, ride it. Does it always work? No, of course it doesn't. But there's a lot of difference between waiting for some kind of digestion of the move and then trying to spot the next leg than just diving in and hoping. In my experience, guys, and I've been caught out many times doing this, chasing stuff on impulse. 2005 and 6, stuff was moving, around and swinging around. We had lots of downside movement. I think I've been 08 actually, moving around. And if you chase it, you kind of got rewarded a few times and you thought it was the right thing to do. Then you got hammered, and it's just not the right way to trade. It's just not. A better way is just to be methodical about it and wait and process the situation. And then I say wait for the change of phase and then predict the next change of phase, using that initial phase as a kind of heads up that when the next phase will probably be like that one, if that makes sense. So anyways, that's my thoughts on chasing. I think that served me well. Maybe you can take a few of those pieces on board and agree with them and kind of implement them with your trading plan.